Okay, we just had the highest weekly close with gold ever at over $1,000 an ounce, and now silver appears to be trending towards backwardation. So let's take a look at what's happening over in China.
Tuesday's first ever investment opportunity for silver bullion. The bars are available in 500 grams, 1 kilogram, 2 kilograms, and 5 kilograms with a purity of 99.9%. Figures show that gold was 50 times more expensive than silver in 2007, but now that figure has reached over 70 times, the highest in the past 5 years. Analysts say that silver has been undervalued in recent years. They add that the metal is a wise investment for individual investors and could be a good way to cash in.
We are the first to offer silver bullion as an investment opportunity. The price for the first batch of the bullion is set very low, close to the cost of the raw material. The investment threshold is not high, and it is more suitable for the general public. Silver is much cheaper than gold.
Okay, so here we are at the NYMEX website, and you can see that in the September 2009 and the October 2009 contracts are actually settling at the same price. This was on September 14th. Now, that doesn't mean that silver's actually entered backwardation. For those of you who don't know, backwardation is where you have a commodity and the price for present delivery is higher than delivery in the future. And this should never happen with monetary metals like gold or silver. The reason is because with the monetary metals, if you have the physical metal, then you have to pay storage fees and you have the opportunity cost of not earning interest. And so the price in the future should be a function of the interest that you would earn on your Federal Reserve notes or your British pounds or whatever, the storage costs of storing the metal, and also the counterparty risk of the counterparty that's supposed to deliver you this bullion in the future. And so what backwardation signals when it happens for an extended period of time with the monetary metals is systemic collapse or currency collapse. That's where people don't allow their physical bullion to be sold and eventually not to be sold at any price. Because otherwise you would just sell the bullion today for say $17 and buy it back for $16 in March, and you'd earn interest on that. But the risk, of course, is that you'd never get your bullion back, which is definitely a real risk in today's day and age, because as I estimate, there's probably 140 paper ounces for every 1 ounce of physical silver out there. So you want to make sure that you have physical silver, or that it's with a trusted third party like gold money, and definitely not in any of these ETFs or other unallocated gold and silver accounts that could be a big problem, like the Royal Canadian Mint, for example, with their multi-million-dollar loss or theft. So what we're seeing is when you go over and look at the SIFO rates at the LBMA, I mean, you can come down and look at all of them. I've just made them real easy right here. We've got the SIFO rates, and what's happening here, as you can see with the highlighted yellow, is the 1 and 2 months are at the same rate. And so that's portending a little bit of backwardation because that second month should be higher, like the 3rd and 6th and 12 months are. And so this will just be something interesting to keep our eyes out on. I actually had written an article back in February, voracious silver appetite, and I followed it up with 5 weeks of silver backwardation. And backwardation had actually happened for 9 weeks with silver, and the price had also risen quite a bit during that time. This was in 2009. So we need to keep our eyes on this trend, and what I'd recommend is why not just add a little bit of pressure to this. An ounce of silver is $16. That's eating out once. Why not buy 10 or 20, maybe 100 or 1,000 ounces, and just take physical possession of it, just to add a little bit to the delivery problems. I think it would be pretty funny. Also, the LIBOR SIFO rates have they're moving into dangerous territory. And so this is actually what I've done. I've been acquiring lots of physical silver, taking possession of it over the last couple months, and so I've been exacerbating the situation a little bit. But that's what markets are for. You get to bet, and the people who are right, they profit. So, or they get bailed out if you're privileged special party. Anyways, with the Chinese, it looks like they're now bailing out their public in the sense that they're going to be offering a Beijing put on the precious metals, both gold and silver. They're encouraging people to buy the physical metals, and I think one of the reasons is they want to keep domestic unrest down, and with the real estate prices there, it's getting more difficult to buy a house, and so the young men, they aren't necessarily getting married because they don't feel like they can provide, so they don't, but maybe if they have a bunch of gold and silver, they can show their wives to be that they can provide. And so I think the government's promoting a little bit of the precious metals to head off a little bit of this problem with the social order kind of changing over there. And so I think that the China, Beijing, they know that the monetary metals are there, and so maybe where we've seen the gold price suppression scheme by the Western central banks, maybe we're going to start seeing a gold price not suppression, but maybe keeping the price up by China in order to stimulate demand among their domestic people. So it'll be interesting to see what happens. Anyways, keep your eyes out on it, and just buy some physical silver just because you can. I think it's still pretty cheap. You look at the gold to silver ratio, and so it's a great buy. And 90% of the silver move usually happens in 10% of the time. So silver doesn't do much, but when it does do something, it does it a lot, and it does it fast. And that's what we've seen lately. So, we might still have a little bit more upside to say about $25 an ounce if gold rallies up to about $1,300. So, good luck. Just kind of an afterthought, for those who are new to the silver market, you might want to get a copy of David Morgan's Get the Skinny on Silver, and you can come right over here to read my review. You click on that, and I've got a video where I go over the book and show you a little bit about what you'll get. It's $10, or you can click on that and get it for free by doing a trial offer with something that you might ordinarily buy. So I recommend getting a copy of that if you're new to the silver market, so you know what you're buying, because it's a great metal.